Welcome to the Deep Dive. In the wild, constantly shifting world of crypto, well, it feels like there's new information hitting our feeds every single second, sending prices soaring or plummeting. Today, we're zeroing in on Solana, SOL, a major altcoin that's been on quite a ride recently, especially after some big ETF news. Our mission for this deep dive is to unpack a very recent market analysis we've looked at, sift through the technical charts, the on-chain data, and really pull out those critical nuggets of knowledge for you. We want to help you understand the key indicators that are truly signaling potential shifts for SOL. We're going to break down what seemed like, well, unequivocally positive news, only for it to swiftly reverse course, and what the deeper charts might now be quietly warning us about. Okay, let's unpack this. So let's kick things off with what felt like a genuinely exciting moment, right? The news hit that SOL's first exchange-traded fund, the ETF, was going live for trading. And just as you'd sort of expect, that triggered a quick 5% rally, pushed SOL up to $160 on Monday. It really looked like, a moment of significant upward momentum.
Yeah, but what's fascinating here is how incredibly quickly that momentum just evaporated. All those gains completely erased within 24 hours. And this wasn't just some minor correction, It's actually a stark warning. It shows that even really compelling news couldn't overcome SOL's, let's say, deep-seated structural weakness right now. It's like Solana ran a quick sprint, looked strong, then just completely ran out of gas right after the start.
That is quite a sharp contrast. A 5% jump, then poof, gone. What does such a rapid reversal almost immediately after what looked like strong positive news, what does that truly tell us about SOL's overall health right now?
Well, it tells us that despite a positive headline, the foundational technical strength simply isn't there. Not enough to sustain that upward movement. When we dive into the technicals, particularly on the lower time frame, we see SOL has really struggled. It hasn't managed to maintain a position above its 50-day and 200-day exponential moving averages, the EMAs, for over a month now. And even when we saw those, bullish break of structure formations.
There's those signals that usually point upwards.
Exactly. Like that pop above $148 last week. They just haven't converted into sustainable uptrends. They fizzled out.
Okay, so that $148 level, which it briefly popped above, that's clearly an immediate pressure point then. So what would a drop below, say, $137 signify in this scenario, especially after these failed attempts?
A drop below $137 would be quite significant, yeah. It would confirm what we call a lower low. Yeah. Basically, the prices move below a previous significant low point. Yeah. And that effectively negates the chance of any near-term bullish continuation. Wipes it out, really. So for any real upside momentum to come back, SOL absolutely needs a successful retest of that $145 to $137 demand zone. And critically, a convincing recovery above $160. Yeah. That's the level it needs to reclaim to signal a real shift.
Okay, that makes sense. And what about the longer-term picture? Let's pivot now to the higher time frame. Is it telling a different story, or is it more of the same kind of underlying weakness?
Well, on the higher time frame, the broader trend, it unmistakably remains bearish, still pointing down. We saw SOL fail to breach that key resistance up at $180 back in May, and since then it's been trending downward, quite clearly within what's called the descending channel.
A descending channel.
Yeah, you can sort of picture two parallel lines sloping downwards, and the price is just bouncing between them, generally heading lower. It signals a consistent downtrend.
And it's such an intriguing contrast, isn't it? You see Bitcoin hovering near its all-time highs,
right,
while SOL has declined nearly 50% since, January 19th. What does this relative underperformance, as you call it, suggest about SOL's market dynamics? And I guess, how might you respond to someone who still thinks this ETF news has to be a long-term game changer, regardless of these short-term technicals?
That's a good point. If you connect this to the bigger picture, this underperformance really shows SOL's high sensitivity to Bitcoin's weakness. It's not just moving on its own steam. It's heavily influenced by the broader market leader, BTC. And look, while the ETF is certainly positive long-term news, no doubt about that, the market is currently telling us the underlying structure just isn't ready to sustain that kind of upward push yet. If this bearish trend persists, a retest of the daily order block between $120 and $95, it remains a realistic possibility.
That order block being?
Oh, right. It's essentially a concentrated zone of past institutional buying or selling. Often acts like a magnet or strong support resistance, and paradoxically, dipping to that range, while painful short-term, could actually offer a more attractive long-term entry point for some investors, perhaps. Conversely, if we see a strong daily close above $160 in the coming weeks, that could indeed flip sentiment and accelerate a bullish reversal. It could carry that momentum into the higher time frame.
Okay, now, what if we look beyond just the price movements? let's look at the underlying behavior of the investors. That's where this really fascinating on-chain metric comes in. UTXO, Realized Price Distribution, or URPD. For our listeners, what exactly is that, and why is it becoming so crucial for understanding SOL's current position?
Yeah, URPD is great. It offers critical insights into actual support and resistance zones. It does this based on where holders actually acquired their tokens. It literally tracks the price levels at which tokens were last moved on the blockchain, gives us a sort of heat map of investor conviction. And what it shows us right now is really interesting. SOL's current price, around $148, sits smack in the middle of a significant supply cluster. Specifically, 14.3% of the entire SOL supply is concentrated right there, between $144.05 and $147.07.
Wow, that's quite specific.
It is. And the URPD data isn't just numbers. It's like a window into market psychology. It shows us that this particular price range isn't arbitrary. It's where a significant chunk of SOL holders bought in. That makes it a critical line in the sand, a psychological and frankly financial stronghold. If it's lost, it could trigger further downside. So, maintaining above $144 is absolutely crucial here. A breach below this threshold would signal potential weakness. It significantly increases the likelihood of retesting those lower support zones we talked about. It's a real test of conviction for current holders.
Okay, so if that $144 line doesn't hold, what are those lower support zones, and what are the implications if the price starts moving into them? Does it get easier to fall further, or are there other strong bases down there?
Well, below $144, the URPD data shows the supply thins out considerably. For instance, around $124, there's only about 1.58% of supply concentrated there. And the $197 range holds just 3%, much less dense.
So much less potential support.
Exactly. This raises an important question, right? What happens if the price fails to hold above $144? The thinner supply at these lower levels could amplify volatility, meaning any downward movement might be quicker, more pronounced, because there are fewer previous buyers clustered there, ready to step in and support the price. We also see some resistance emerging just above the current price, around the 157 price. About 5.55% of supply is concentrated there, which certainly poses a challenge for any immediate upward momentum too.
Okay, so summing this up, we've got a quick rally that just vanished, coupled with these persistent bearish technical signals, and now we understand these really critical on-chain support levels from the URPD data. So what does this all mean for you, the listener, trying to navigate this information, stay informed, and not get totally overwhelmed?
Yeah, it's a lot to track. But it means that understanding these specific price levels, like that dense $147.07 supply cluster, or the $137 and $160 technical thresholds, isn't just about memorizing numbers, not at all. It's really about interpreting market psychology, identifying potential turning points based on actual investor behavior, not just headlines. It empowers you, hopefully, to see beyond the initial noise and truly understand the deeper forces at play. Whether you're just observing the market or, making your own decisions, it's about building that more complete picture.
That's a really powerful analysis. It shows us the layers beneath the headlines so clearly. It really highlights how a seemingly positive event like that ETF launch can be so quickly overshadowed by underlying technical weakness and these very specific supply and demand dynamics that data like URPD reveals. It almost feels like the market has its own hitting language, doesn't it?
Absolutely, it really does. And that leads to maybe a final thought for you, the listener, to consider. Given SOL's demonstrated sensitivity to broader market trends and its current, let's say, struggle at these key support levels, what might be the next truly significant catalyst, positive or negative, that actually shifts its trajectory? Something beyond just another breaking headline. It makes you wonder, doesn't it? How much of a market's true direction is driven by that immediate news, and how much by these deeper, less obvious technical and on-chain indicators? What else might be brewing beneath the surface that we can only really see by doing this kind of, deep dive into the data?